I'm thinking if we're at 7.5% by the end of this year for mortgage rates, I think that's going to nip it in the bud, where a lot of people that were on the fence are going to be priced out of the market. And that's what's happening to people, especially in that lower income bracket.
Oh,
They
yeah.
what they could afford no longer exists because the interest rates have gone up, and they had a payment that they knew that they could afford. There isn't anything in their price range that was in that price range with that new interest rate, unless sellers just all of a sudden like decide to sell their houses like crazy, which I just don't see happening because they have nowhere to
Because
go.
they have nowhere to
um,
go, right?
yep, the supply is the biggest problem. We just do not have enough supply of houses.
In my research, what I really did discover is that overall, you could end up, because real estate prices are up here, and they were supported. I mean, they were targeted by the central bank, openly targeted for reflation. You should be careful what you wish for. But at the same time, gold prices have been absolutely suppressed because a rising gold price indicates a failing currency, and they don't want you to do that. Realize that. So, like in Japan in the early 90s, when that real estate bubble popped, we saw residential real estate in terms of the yen drop 85% and commercial drop 95%. And historically, you could take 25 ounces of gold or the equivalent and buy an entire city block in Berlin, buildings and all. I personally think we're going to see something like that again, because I personally, there's no doubt in my mind, since this is a currency life cycle issue, that we're headed into a hyperinflationary depression. If you like this clip and you want to watch the full video, just click right here. And to subscribe, click right here.